Ugh. Good morning. Good morning. It is Friday, the 5th December. This is the Morning Blast. You join myself and Michael, who we are both. Michael, out of 10, how hungover are you?
I've had a cheaty because I've had a bacon sandwich, so I reckon I'm probably down to about a 7 now.
Well, I've not eaten, but I have woken up with a McDonald's next to me. So I'm about a 7 as well.
Importantly, ladies and gents, I would like to inform you, Ryan is clearly growing up because this McDonald's is on a plate, which makes a change.
Well, you can't tell people this because now people know that we WhatsApp each other and show each other how we've woken up in the morning.
Oh, God.
Right, anyway, this is the
Can we do a
Morning
legal
Blast.
disclaimer very quickly?
Yeah, right, quickly. This is the Morning Blast. As usual, this is recorded live. We apologize. Well, actually, no, we don't apologize for trigger warnings. If you don't like it, fuck off. This is recorded live. Apologies for any expletives and rants. Nothing we discuss is trading or investment advice. Nothing we say is an endorsement unless we make it very, very clear. That's about it, I think. Is that it?
Yeah, and of course, no Clive this morning.
No climate, no market
something
updates.
that's exciting, isn't it?
But claims he's ill, but we know he's hungover.
Do you notice that, ladies and gents? Us two are hungover and we soldier on. Clive's hungover and he throws the towel in.
I'm not being funny. I'm a complete mess and I'm still here. But anyway, right. What happened yesterday? Tell me because I have no idea.
Well, nor do I, because I spent all afternoon
hang
in
on.
Scots and all evening in the pub. So
I've just realised by me putting my hand on my head whilst I'm talking to you, I completely forgot I had my haircut yesterday. Turns out
oh my God. Oh dear. Yeah, what happened yesterday? I've got no idea, to be completely honest with you. What I can tell you is that markets did basically nothing, which I was very relieved about.
And that's the end of the show.
Indeed. It does make it relatively easy to catch up when you get back to the desk. Some marginal dollar softness coming through once again in the FX space. Treasury's pretty range bound and stocks closing flat on the day. In terms of economic data, we did have some figures out of the States. Initial jobless claims coming in at 191,000 in the week to the 29th of November. That was well below the bottom of the forecast range and also down from the prior 216,000. It's also the lowest level for initial claims since all the way back in September of 2022. But I do wonder whether there perhaps might be a bit of a skew from Thanksgiving in some of this data. So we will obviously pay extra this week to see whether it was a fluke or whether this is a sign of labour market conditions improving. In any case, continuing claims, they also fell to 1.939 million, down from the prior 1.96 million. And we also had the latest factory orders data out of the States yesterday. Factory orders rising by 0.2% in the month of September. So very, very stale data. And that's compared to the 1.4% rise that we saw in August. Of course, this data continuing to sort of filter out as the statistics agencies stateside effectively play catch up after the government shutdown, which came to an end towards the middle of last month. In terms of other bits and bobs, we did have a few headlines on the trade front yesterday. US Trade Representative Jameson Greer was saying that trade with China needs to be balanced and probably needs to be smaller. He was also talking about how the trade deficit in goods with China is down by about 25%, which according to him is the right direction. Very familiar rhetoric, although I would of course remind that actually trade deficits don't really matter unless you're trying to use them to prove a political point. But there we go. Sticking with US trade relations, Trump is reportedly going to be speaking about trade with both Mexico and Canada. That will take place in Washington, D.C. today. This is according to CBS citing sources. The other thing that is happening in Washington, D.C. today is the World Cup draw, which Trump will also be attending. And I promise you I'm not making this up. FIFA have brought in the Village People to deliver a live rendition of YMCA.
Whoa.
The World Cup
As in
draw.
the original Village People.
I assume so, yeah.
I'm going to get into a lot of trouble for this, but I honestly thought they all died of AIDS.
Oh, God. Oh, that was going so well until the last word of that sentence, wasn't it? Jesus. Moving very swiftly on from that, and lastly on the trade front, there is an effort.
YMCA.
Oh God, no! It's all descended, hasn't it? There is an effort among US senators to block NVIDIA's chip sales to China for 30 months. This would target not only the Blackwell chips, but also the H200. This is according to the FT, citing sources. Of course, this comes after we had Jensen Huang, the CEO of NVIDIA. He obviously met President Trump on Wednesday, and he was saying that even if these restrictions are lifted, he's not actually sure whether there will be demand for the H200 chip from China anyway. But nonetheless, it is clear that US lawmakers continuing to very much target the semiconductor space in these ongoing geopolitical battles. Moving away from that, a couple of headlines in terms of Japan. Bloomberg citing another round of BOJ sources this morning, noting that the Bank of Japan are likely to hike rates this month and will leave the door open to further moves. They are said to be waiting to check data and market moves up to the final decision, which of course comes on the 19th of December. But money markets now pretty much fully pricing in a 25 basis point rate hike from the BOJ. That's currently around about a 9 in 10 chance if you look at where swaps are trading this morning. That did help the yen to gain a little bit of ground. The yen has also gained some ground after another round of jawboning from the Japanese cabinet secretary. What, jawboning?
Oh, jawboning. Sorry.
From the Japanese cabinet secretary, a chap called Kihara. Apparently, he's saying that they will take appropriate steps on, quote, excessive and disorderly moves in the FX market if it were to become necessary. Again, this is seen as the Ministry of Finance leaning against any potential one-sided or what they would deem speculative moves. Given that dollar yen has fallen about a big figure and a half over the last 2 days, I don't think they need to be too worried at this point. Yeah. But nonetheless, it is interesting timing for those comments. Moving on from that, but sticking with sort of monetary policy, we heard from the NEC director, Kevin Hassett, yesterday. He was saying that real wage growth is now higher than inflation. Well, thanks for that one, mate. Well, he was also saying that he thinks it's likely that the Fed will cut rates at the next meeting. As much as it pains me to say this, we do need to at least pay a modicum of attention to what Kevin Hassett is saying these days, given that he is seen as very much the front runner, if not the certainty to become the next Fed chair when that nomination becomes announced, which Trump has touted for early 2026. And speaking of Trump, according to a Trump official cited by Bloomberg, the US is apparently looking at taking additional stakes in critical minerals companies in the United States. Obviously, we know the Trump administration has taken a stake in a couple already. They've also taken a stake in companies like Intel. This does very much seem to be the way that they are doing things. And of course, we've mentioned on the Morning Blast before that there is sort of our working assumption or guesstimate that they may look to take a stake in Boeing at some point.
You know what? I'm so glad
struggles that the firm has been having. Go on.
So glad you said that, because I was just thinking, hang on a second, I certainly remember raising this with you and with the Alpha Pix guys on the Friday Fix. But yeah, I'm still absolutely certain that this will happen. I have no idea when.
Well, I certainly wouldn't be surprised, although their timing probably isn't great because Boeing are up about 15% in the last fortnight. But I do agree with you.
You know
because they've started to take off.
I see what you did there. No, it's because obviously people listen to me.
Oh, yeah, naturally. Ryan Paisy moving markets once again.
I'm back, baby. I'm back.
Oh, dear. A couple of final things from me just on the AI space. The first is Google or Alphabet. Apparently, they've rolled out Gemini 3 Deep Think mode to Google AI Ultra subscribers in the Gemini app. So if you are a Google AI Ultra subscriber in the Gemini app, please do write in on a postcard and let us know what that's all about for the rest of us at the back of the room. And last but not least for the time being, Meta, they are reportedly paring back on their metaverse ambitions, I suppose, for want of a better word. CEO Mark Zuckerberg is going to meaningfully cut resources devoted to the division. These budget cuts could end up being as high as 30% for the metaverse division within Meta, which is easy to say. And these cuts would most likely include significant layoffs as well. So that is something to bear in mind in the tech sector. And sorry, I've just got distracted because the cricket has paused due to a very fat man walking around behind the bowler's arm with a beer.
Oh, well, on that note, I don't know what to say. Well, anyway, let me move on quickly to...
Sorry, I've just seen Cam has asked any news with Pony AI? No, there hasn't been any news with Pony AI recently, but I am very, very, very pleased to inform our listeners that the stock has fallen 40% from the highs that it printed back in October. Yeah, so, it's now only up 92% since we first mentioned it.
But any reason why?
No.
I wonder when they do their, because, listing in New York and whatnot, I wonder if we'll be invited to the AGM.
I think we should. I mean, we are their biggest public supporters. I mean, completely accidentally, but
we were their biggest fans before we even knew they existed.
Yeah, absolutely. Maybe we can gallop over to the listing.
God, really? I'm too old for this shit. Anyway, thank you, Michael. Some choice headlines from the overnight news roundup now, and this is going to be very swift because I'm going to have to close one eye so I can read it. Do follow Zach Eisman for the raw version, and also obviously do follow our Substack so that it gets sent directly into your inbox. Where are we? Where should we start? SoftBank, Masayoshi Son, don't do the eyes of SoftBank, developing a plan with the Trump administration to build the Trump Industrial Parks for AI infrastructure. Initial plans for a single $1 trillion with a T industrial city in Arizona evolved into a network of manufacturing facilities on federal land. The facilities would use funds pledged by Japanese government as part of a recent trade deal, so one to keep an eye on there. USTR, the US trade with China needs to be balanced and probably needs to be smaller. This is according to Jameson. Obviously, Michael just covered this just now. And he viewed the 25% drop as the right direction. Japanese bond yields. The benchmark Japanese government bonds slid further on Friday morning, pushing yields to an 18-year 1.8 high. Expectations firmed up for rate hikes by the Bank of Japan. What else we got? China's leaders are widely expected to stick to its manufacturing-led growth strategy in the key policy meeting this month, even as calls grow at home and abroad for a more urgent shift towards consumption. The Communist Party's decision-making Politburo typically convenes in early December, followed within a few days by a Central Economic Work Conference, so expect a lot of headline risk around that. Sticking with China, China's exports likely return to growth in November after an unexpected dip in October. Following, this is according to a Reuters poll ahead of the data release on Monday, as manufacturing rushed to move inventory to take advantage of the fresh tariff truce with the US. What else we got? UK house prices, they stalled ahead of the budget, according to Halifax. Data suggests fears of tax rises have a dampening effect on the property market.
Well, I never.
But to be fair, we have seen this pretty much with all UK data. And as much as I would like to say, well, as much as I hate to say it, yesterday's construction PMI, for example, which was like 30 something.
Oh, it was disastrous. 39 or something, wasn't it? It was the lowest.
Maybe.
Whatever it was the lowest since COVID, since the pandemic.
Yes. But as much as I would love to point fingers at Rachel Reeves and Keir Starmer and call them twats, this was definitely, pre-budget, jitters. No one wanted to commit to anything ahead of that. I'm not saying it's going to bounce back significantly after the budget, but just this bear that in mind that there was a caveat. Australia now, Australia's beef exports, and I'm sitting next to my Big Mac from last night. They've already hit a record high this year on strong demand from the US, with no sign of a rebuild in the American cattle herd. You remember kind of 2-3 weeks ago? No, maybe more. President Trump claiming he was going to solve the beef problem in the US.
Oh, yes, he was, yeah.
But turns out they're just buying Australian beef. What else? In geopolitical news, a top US diplomat signaled that Turkey is getting closer to overcoming a key obstacle that has prevented them from purchasing F-35 jets. And in equity news, before I hand back to Michael so I can have a little bit of a throw up, Tesla, they launched a new lower price version of its Model 3 car in Europe on Friday, a few months after releasing in the US. And Swiss Re, they forecast higher profit for 2026, said it would launch a buyback program of $500 million. And that's about all I can be bothered to talk about, to be honest. Oh no, I'll tell you what, finally, copper. Dr. Copper touched a record high this morning after Citi lifted its price outlook for the industrial metal, with supply concerns and optimism around a likely interest rate cut by the US Federal Reserve next week underpinning the market.
Well, there we go.
Yeah.
Very good. Actually, it wasn't at all.
Yeah. Well, look,
let's have a look.
Well, no, but hang on. At least we show up.
Indeed, Clive. Anyway, in terms of the day ahead, what have we got on the docket? What we don't have, I should say, is the November US labour market report, because, of course, that has been delayed until the 16th of this month. Instead, at 10 o'clock this morning, we'll be getting the final read on Q3 GDP out of the Eurozone. That's expected to point to growth having remained, unrevised at 0.2% on a quarter-on-quarter basis. Then into the afternoon at 1:30, we get the November Canadian jobs data. Employment set to have fallen by 2,500 in the month, although it did rise by 66,000 in the month of October. So I don't think that's worth worrying about too much. Unemployment seen ticking a little bit higher to 7% from a prior 6.9. And then as we move through the remainder of the afternoon, at 3 o'clock this afternoon, we get the preliminary read on consumer sentiment from the University of Michigan. This data for December seen rising to 52, up from a prior 51. Of course, the end of the government shutdown likely to give things a bit of a boost there. Also at 3 o'clock this afternoon, which is actually 90 minutes later than usual, we will be getting the personal income and spending stats for September out of the United States. And this will, of course, include the core PCE price index, which, as we are contractually obliged to say, is the Fed's preferred inflation metric. And that is seen falling to 2.8% on a year-on-year basis in September, down from the prior 2.9. Of course, this data is very, very stale at this point, and it shouldn't materially alter expectations for the FOMC next week, where money markets price about a 92% chance that the Fed do deliver a 25 basis point cut on Wednesday. Other than that, we're due to hear from the ECB's Lane and Vilroy as we move through the day. Of course, continued focus on trade and geopolitical headlines as well, especially if Trump wants to, politicize the World Cup draw, which certainly can't rule out. And of course, do be aware of the potential for any gapping risk over the weekend as well. But for this morning and for this week, that's all from me.
I felt the pain when you said that.
10 days to go, mate. That's all.
10 more shoplifting days to go. Well, as Michael said, that's it from him. It's also it from me. I'm going to go back and see if I can polish off the McDonald's that I appear to have ordered last night.
God.
Michael, I might be around for a beer later on if you fancy one.
Hair of the dog at this point.
Well,
yeah.
Exactly. And also, Mother Paisley is in London, so maybe we'll go and get her to extend. The beers are on Mother. But listen, thank you so much for tuning in this week. We've had record numbers of downloads, etc. for our podcast. We really do appreciate you. Big shout out to
and also, if you've downloaded this one, apologies.
We apologise.
This is not normal service. But actually, it is on a Friday.
Yeah, right. Also, big shout out to Big Tom, who behind the scenes helps us. Well, basically keeps us in line. Let's be honest. Yeah. Whatever you're doing, keep it tight. Stay safe. Have a phenomenal weekend, and we'll see you all on Monday. Much love.
We will indeed.